Hello guys, you're welcome to my YouTube channel. This is Synthetic Goddess. On this channel I teach strategies on how to become a profitable trader even if you're a beginner. So if you're new to this channel, kindly hit the subscribe button and turn on the notification bell so that you can get notified whenever I drop any video. If you are a returning viewer, you're welcome back to my channel. In this video, I will be teaching about liquidity, and then I will be making mention of 3 types of liquidity that we have. Alright, so the first type of liquidity I will be mentioning is the major liquidity. The second one is external liquidity, and then the third one is internal liquidity. And I'm going to be using Volatility 25 index to explain. I'll be making use of daily time frame. If you would love to use my broker, which is Deriv, check the description box and then you will see the link to register. Okay, so I'm going to be using Volatility 25 index to explain. Now, like I always say, whatever you do, learn to know structure. Ensure you really know structure very well. That's going to help you in identifying your liquidity. You need to be able to identify your structure and mark out your structures so that the liquidity is going to be easy for you. Liquidity cannot stand on its own except with structure. Structure is the king of the market. So you really need to know about structure before you just jump into the market. So as I always say, we will check out for the structure of the market before we start marking out our liquidity. So basically on this time frame, which is the daily time frame that I will be using here, we are in a downtrend. The market has been trending to the downside for over months. Okay, and we are in a downtrend, like a total downtrend in the market on this Volatility 25 index. We are in a downtrend. We've been violating lows. We've been violating lows to the downside. So here I'm going to mark out the last break of structure to the downside, and I'll be explaining with the structure. So here is our last break of structure. We have a break of structure here. We have a break of structure here to the downside. Now, how do we know our major liquidity? How do we know our internal liquidity? And how do we know our external liquidity? Now, when we talk about major liquidity, there are liquidity that we are not expecting the market to violate. There are liquidity we are not expecting the market to take. And major liquidity has characteristics. If you want me to drop the characteristics of major liquidity in my next video, just drop a comment. Drop a comment in the comment section and tell me you want that video. Once I see the comment, I'm going to drop the characteristics of major liquidity in my next video. So when we talk about major liquidity are liquidity that we are not expecting the market to take, violate, or raid. We're not expecting the market to even raid it with 1 pip. And that is why when we have a break of structure, there are some break of structures that are very, very valid even with 1 pip. If market breaks a major liquidity with 1 pip, it is a valid break of structure. Even if it doesn't break it with the body, if the market breaks a major liquidity with 1 pip, it is a valid break of structure. Major liquidity are actually liquidity we are not expecting the market to get to or to raid. We are not expecting the market to take it at all. And when we talk about external liquidity, they are the liquidity we are targeting for markets to raid. We are targeting those liquidity for market to raid it. That is where we always put our TP for markets not to for markets to raid it. We are expecting markets to get there and raid it. And when we talk about internal liquidity, they are always formed inside structure range. They are always formed inside structure range. The market will take them as liquidity and continue to take our external liquidity. Now, in a downtrend, the highs are always our major liquidity. Like I said earlier, we have characteristics to it so that you don't just mark out any high you see in a downtrend. You don't mark out any high you see in a downtrend, and eventually market will come, raid you out, continue in your movement, and then you're counting that as a break of structure. So it actually has characteristics. So in a downtrend, our major high is always classified as the highs. We are not expecting markets to raid the highs. And in an uptrend, we always classify the lows as our major liquidity. We are not expecting the markets to raid the lows. And in a downtrend or an uptrend, the structures that are formed inside the structure range are what we call our internal liquidity. So here we are in a downtrend. Where do I mark out my major liquidity? Here is my major liquidity. I'm not expecting the market to come to this area and raid this high even with a pip. I'm not expecting the market to come back here and raid this high. So here is my major liquidity in this particular structure range. In this particular structure range, this is my major liquidity. And in this particular structure range, here is my external liquidity, because we are in a downtrend. Here is my external liquidity. External liquidity are liquidity we are expecting the market to raid. And when we talk about internal liquidity, any structure formed from here, from the major liquidity down to where we have the external liquidity, is our internal structure. So the market is our internal liquidity rather. The market can come back here, take this high, and then continue the movement to the downside. It is an internal liquidity that is being taken. This is not a major liquidity. It is not a major liquidity. And you can see different external liquidity on your lower time frame. I am using this as an example. Let's go to another time frame and explain with what we are saying with the structure. Let's explain with the structure. So here we have a break of structure to the downside. We have a break of structure to the downside here, and I'm going to be marking out this as my major liquidity. I'm not expecting the market to raid it. I'm marking this as my external liquidity. Now, your major liquidity and external liquidity are always based on time frame. You need to know the time frame that is suitable for you. You really need to know the time frame that you want to use. Don't just jump into any time frame and then get confused at the end of the day. And here is my internal this is my internal liquidity. The market can choose to raid internal liquidity, but I am not expecting the market to raid major liquidity. And in an internal liquidity, we might have a major liquidity based on the characteristics. Such that when market raids that internal high, you are expecting the market to raid the structure range high. You are expecting it to raid the structure range high. So when we are talking about internal liquidity rather, we are talking about major liquidity, talking about external liquidity. You need to know your structure. Once you are able to identify your structure, you will be able to easily mark them out. You will easily mark out your major liquidity, your external liquidity, and your internal liquidity, and you will know where you are not expecting the market to raid. If market violates it, it simply means you have a change of structure already. So like I said earlier, external liquidity had the liquidity we are expecting the market to take. Major liquidity had the liquidity we are not expecting the market to take. Internal liquidity are liquidity the market could actually take inside a structure range and continue its movement either to the upside or to the downside. If you want me to drop the characteristics of major liquidity, drop a comment for me and let me know if you actually understood this video. If you understand this video, drop a comment for me so that I can get motivated to make more videos that will make you understand the structure, the market as a whole. I'll see you in the next video, guys. Have a lovely trading day. Bye.